now that Bitcoin is hitting all-time highs and we got the treasury companies seemingly going the other way.
Yeah. Do we get to the point where the second largest holder of Bitcoin is threatened, or the third largest holder of Bitcoin is threatened? I don't think that's a 0% chance. If we're talking about any treasury company, like, we are entering the traditional capital markets and they're putting a big spotlight on it, I think this market will exist for a finite period of time. I think somebody will have, their sell limits in at like 250K, 300K. I do think it will be a round number. It won't surprise me if we end up, somewhere, in that range. That being said,
What's up, guys? Before we get started, I've realized that over 50,000 of you guys keep coming back for every single episode. And while I'm eternally grateful for you guys to keep coming back, I've realized that 79% of you guys are not subscribed. So I have one small ask before we get started. If you guys could hit that subscribe button and hit that like button to help send this interview and many more to the stratosphere, it would be greatly appreciated. All right, enough for me. Let's get into the show. Bing bong. I am back with another edition of the State of Bitcoin podcast where I've got the man, the myth, the legend, Wyatt O'Rourke. I thought I was going to botch your last name. I botched the first name, but he's the author of the Bitcoinization of Finance and has a lot of expertise in the traditional finance world, as he's now a TradFi bro turned Bitcoin bro. But Wyatt, I had to bring you on right now to dive into what the hell is going on with these treasury companies, because we got Bitcoin shooting up to all-time highs here literally the day before we recorded, and now we got MSTR falling down. So what the hell is happening to these Bitcoin treasury companies? Is it all over? And welcome to the show, brother.
dude, thank you so much for having me. Absolutely stoked to be here. I'm nicotined up, caffeinated, ready to fire away here. So, and I'm feeling feisty. Uh, yeah, dude. So treasury companies, like, they're very interesting. I've gone back and forth on these, quite a bit, now, and I got, quite a bit of a few notes prepared, and so I think we'll be able to take this some interesting directions. But just, top level, I do really think this is the Bitcoinization of finance, thesis, playing out, right. And I'm a Bitcoiner. We all, think hyper Bitcoinization is going to happen inevitably, like we want it to happen, and so I think TradFi and finance are going to be, a big reason, or at least like the mechanisms of how that happens. And so many Bitcoiners are jaded when they hear the word finance, and and in fairness, like, I largely agree with a lot of their qualms. I kind of think just every industry is susceptible to fiatness and fakeness, and I kind of broadly think of finance as the business of money, so it's particularly susceptible to fiatness. But that doesn't mean we should discredit the tools and the products and strategies that TradFi has created. And so what these treasury companies are doing at large is it's allowing it, gives some of the largest pools of capital in the world another tool to get Bitcoin exposure. So I don't necessarily think that's a bad thing. And it was kind of inevitable to happen. It's just, and it will happen in many different tools, products, and use cases. Right now, the hot topic though is just using the stock market and common stock and now preferred stocks to do it. So that's kind of how I think of it high level. I fully align with that thesis. But as we get into it a little bit more, and some of the kind of underlying mechanics, that's where I think it gets interesting.
Yeah, 100%. So, I guess the narrative previously was, hey, you know what? Get into these MSTRs, these, whatever, Nakamoto, all of these new treasury companies, and it would be a levered play on Bitcoin. So essentially, Bitcoin goes up, MSTR goes up 2, 3, 4x comparatively. And that was kind of always the narrative. But now we're seeing kind of, is it the decoupling, or are people just freaking out too much? Why is there's kind of, like, I guess, disconnect from the Bitcoin price now, as it seems, as the Bitcoin or now that Bitcoin is hitting all-time highs and we got the treasury companies seemingly going the other way?
Yeah, just to be a narc for a second before we get into some specific companies, I am a licensed, registered, financial professional and fiduciary. So, not investment advice, educational purposes only. The Bitcoiners love that, man. They
Yeah,
love the disclaimers.
exactly.
I always get booed at the space when I have to say that, but whatever. Um, but you bring up an interesting topic. I think what's important for Bitcoiners specifically to understand here is, it's like I'm a big Sailor fan. I think he's going to go down as like a captain of industry type figure for what he's done for corporate finance, and I do think it's genius. That being said, what I want Bitcoiners to understand is Bitcoin it's unique in many ways. It's a truly decentralized market. If we're talking about any treasury company, like we're wading into fiat games here, right? It's like we are entering the traditional capital markets, and we're not playing by Bitcoin rules anymore. And so I think what's playing out here with Bitcoin ripping and some of the treasury stock falling is we're layering markets on top of markets, right? And so there becomes like a lot of complexity layered on top of each other. And if we just kind of take MicroStrategy or strategy in particular, right? So obviously, like the pioneers for the strategy, they continue to pioneer with some of their preferred offerings, which I think are really interesting. But I'm probably going to get the specific preferred stock wrong here, but I think it's Strike. That is a preferred stock that pays a dividend, but they issue or can satisfy that dividend via common shares, right? So we're just layering complexity on top of, or markets on top of markets here. And when I think of the subsector specifically, this is really they're I'm kind of deeming this like a new market, and they're putting a big spotlight on it. I think this market will exist for a finite period of time. It's like this interesting transitionary period between a fiat denominated world and a Bitcoin denominated world, and these companies are really competing in the fiat denominated return on Bitcoin exposure market is kind of what I'm dubbing it, right? So it's dollars in, dollars out. You have no direct ownership of Bitcoin, like you are getting exposure to Bitcoin via owning, either the common stock or preferred stock of one of these companies. And so that really comes down to this market, this fiat denominated return on Bitcoin exposure market. It really kind of comes down to how synthetic your exposure is to Bitcoin. And just using that strategy example, that just outlined. So we have preferred stock tied to the common shares, also tied to other convertible bond instruments that they're using to purchase more Bitcoin. And so any holder of a share of any Bitcoin treasury, it's like they need to really understand it's like how synthetic their exposure is, and that exposure is just getting more and more synthetic as the investment vehicles become more complex.
Yeah, and I mean, you wrote the book, The Bitcoinization of Finance, too. I guess more on like a general kind of topic. Where do you think like the overall evaluations of kind of the stock market is right now? Because I mean, if you price the S&P 500 in Bitcoin, all of these guys, they love to kind of talk about that. But the unique thing with all of these treasury companies is that now with the FASB, it seems like it's kind of flipped evaluations on its head, right? Like we had Strategy just announce its revenue and have the earnings, and it was the 13th ranked company by net income, the 96th by market cap. But what I think is super interesting, it was 495th out of the PE multiple, so the price to earnings at 4.7. And now, of course, I don't know about you, but I read The Intelligent Investor. I was big into studying Warren Buffett. That's actually how I found Bitcoin, thanks to Preston, and we study billionaires. So looking at the stock market from these traditional value investing principles seemed to be the way to go, at least what made sense to me. Now that's evaluation's gone out of the water, right? Like, I mean, we're getting price to earnings ratio. Nvidia is at 40.8 right now, according to the last earnings, and these price to earning ratios are just astronomical. But you're telling me that Warren Buffett wouldn't love seeing a stock at 4.7 price to earnings right now? It seems like it's a no brainer. But there's some resistance to these Bitcoin treasury companies and the financial world looking at all of this. So I guess this is a long-winded way. Like, how do you see the overall market and then these Bitcoin treasury companies, I guess, flipping them on its head?
Yeah, it's a great question. Like, I'm not the most bullish person on equities. In general, if my clients have exposure to equities, it's generally like pretty targeted, and that's a couple main reasons. Like, there's some big headwinds and underlying trends. I think we need to deal with, or equity investors need to be able to stomach or form their investment thesis around. And so, not sure if you caught that Richard Werner interview with Tucker, but he did a great job laying out how banks create money and how money printing fuels asset growth and asset appreciation. So I think if we really kind of look back to circa 2008, 2009, I think we probably pinpoint most of the S&P's return to money creation. So I'm kind of bearish on it in the fact that it's going up because more money is in circulation. And then when we click a little bit deeper into it, S&P 500 market cap weighted index, and passive investing has become such a big craze where money's just kind of blindly flowing into seven companies as it is. To those seven companies credit, Meg seven, a lot of them are making heavy investments into AI. I think Bitcoin and AI are probably like the trends of our time, if not at least the trends of the next 10 years. And so if you look at those companies, they have phenomenal earnings, quality balance sheets. I'm really bearish on the S&P 493. It's if it's not Bitcoin that's going to disrupt them, it's going to be AI. And
What if I told you never had to sell your Bitcoin? Instead, you can borrow against it with Salt Lending. Why give up your hard earned Bitcoin when you can unlock its value without letting it go? With Salt, you get secure Bitcoin collateralized loans with no credit checks, no prepayment fees, and best of all, no rehypothecation. Salt has had zero customer collateral losses since it launched. Salt was the first platform to offer Bitcoin collateralized loans starting way back in 2016. Today, they offer tailored options for both individuals and businesses. And now introducing Salt Shield, the no liquidation solution. No forced liquidations during the lifetime of your loan when you're enrolled with Salt Shield. This just launched at the Bitcoin conference in Las Vegas, and it is next level peace of mind. For Green Candle listeners only, head to saltlending.com/green-candle for this exclusive offer for your Bitcoin collateralized loan. You can get cash for your Bitcoin today. Salt Lending, secure, trusted, proven.
Chamath on the all in. I know Bitcoiners kind of have differing views on him, but he was just like specifically talking to how AI is going to disrupt these companies and like the IT bureaucracies and how they're really eating like their own returns. And I just kind of think of it simply as like there was a big shift in the early 2000s for companies that were like server based versus cloud based, and now we're kind of moving from like cloud based infrastructure to AI based infrastructure. And so that's just a lot for any executive to try to balance a lot of moving parts. I'm kind of a fan of macro. It just like interests me, but I think we need to be careful trying to connect too many dots, because these are complex systems and it's easy to find the data points that support your own conclusions. But that may not be the case, because there's a million other variables and moving pieces that you may have missed or not considered. So in that context, and relating it back to Bitcoin treasury companies and some of these kind of traditional, I would say, equity valuation metrics, like it's important for anybody investing in these companies, or a market observer, to understand that Bitcoin treasury companies are delivering value to shareholders a different way. Like, they're not delivering value through income statements and profits like how the market is used to valuing companies. Like, most stocks like are valued based on future earnings and how much net income and profits they can deliver to the shareholders. It's like, well, you know Bitcoin doesn't have interest, it doesn't pay dividends. Like, these companies are solely trying to accrete value to their shareholders via the balance sheet. So I think it's going to actually take a while for like the broader market to recognize that. Even though Bitcoiners may be cued in, we're talking about like the global base of investors that have access to specifically U.S. equity markets. And so that's just going to take a lot of time for people to kind of wrap their head around how to value these companies differently. So I'm not surprised like Warren Buffett isn't interested, even if strategy does have a maybe an attractive earnings per share ratio. But that's ultimately not what they're trying to achieve, or what any Bitcoin treasury company is trying to achieve. So um, fully understanding it's like, okay, these companies are delivering a different value proposition than the market is used to.
Yeah, and it's interesting you're saying all that. So I mean, and I agree, right? I mean, the value prop is, essentially using traditional financial rails, obtain more debt, and then FOMO into the new system almost, right? Like buy a bunch of Bitcoin, utilize debt, cheap debt to do that. But it seems like there's going to be a lot of leverage. Now, last cycle we had a lot of, I guess let's call it the Black Swan event, was a lot of these exchanges, the unregulated guys coming in and essentially blowing up. I have the theory that, a lot of these treasury companies, it's bound for some of them to blow up, and that would be kind of the catalyst of the next bear market. What are some of the things that you're looking at when it comes to these treasury companies as to, hey, you know what, they can manage all the debt, they can do it, very well, yada yada yada, because it seems like this is the new craze. And I agree with you. Like, I think Saylor is going to come out on top because he's been doing it for so long. They got 600,000 plus Bitcoin on the balance sheet right now, and everybody's competing for spot number two. And that competition for number two seems like it's going to cause some people to get a little hairy with some things. So how are you looking at them to see, okay, this is maybe one that's safe, or are you just kind of, I guess, more on the side that, hey, just stick to Bitcoin, keep it simple, stupid?
Yeah, I mean, personally, I am a simple guy. I do just stick to Bitcoin. But as a finance bro, I do think this stuff is extremely interesting, and like I said earlier, it's like the beginning of hyper Bitcoinization, which is obviously very important. And you mentioned Preston. I also got orange pilled by Preston, so that's pretty cool little experience we share. But he had Jesse Myers on the show a couple weeks ago, and he said that this is a winner take most game. Do you think there's some truth in that? Just because there's different dynamics. We were talking about geopolitical, equity markets. An investor in Germany or may not have access to U.S. equity markets, and so it's like I do see like a world where there may be a geopolitical or kind of a geography based winner in some of these different markets, just because you know traditional fiat rails, not every investor can invest in U.S. equity markets versus European, etc. Um, but while there's I do think some truth in Jesse's statement, I'm going to kind of focus on U.S. markets. I'm leaning towards this is a winner take all market, and I think you kind of hit the nail on the head with strategy. And so off the bat, I think there's this interesting dichotomy with the Bitcoin treasury companies and kind of the strategies being deployed. So I'm seeing it as kind of like one or two ways. So you either have an existing company, that has some sort of, I'll say like, for lack of a better word, like real business. Strategy does have a software business. Obviously, it's pretty small compared to their Bitcoin holdings right now, but there is a business there, and there is cash flow generated from that business. And in that interview, Jesse points out that I do agree with him on this point, where it's like if you are doing the Bitcoin treasury strategy, you have to be committed to it. I think GameStop is a perfect example. It's like, oh, we're going to put Bitcoin on our balance sheet, and people buy our stock. It's like, well, there's a lot more to it than that. It's like I think if you are purchasing shares of a treasury company, I think you're kind of largely taking a bet on that company's management team, and if you have faith that they'll be able to fully commit to the strategy, they have the chops and to use debt efficiently and structure specifically the financial side of the business wisely, so they can kind of mitigate risk in a number of potential scenarios that could arise, whether it's drops in the price of Bitcoin, drops in the equity markets. And so there's a lot of moving pieces. These leaders need to be tuned into, and it's honestly one of the most difficult things as an investor, to try to read into the minds of other people and assess or guess what you think they're going to do. So that kind of adds another layer of complexity to it as well. And then, if there is an existing business there, if they do have cash flows, that's going to really open the door, or at least like a lot of the optionality when it comes to some of these, debt terms that a company may be signing up to. If they don't have an existing business, this is where I'm a little more worried, because, the, kind of I guess standard thing to get off the floor. A lot of these Bitcoin treasury companies are taking over zombie companies, or there's just kind of like spacking a shell company, or taking over some sort of SPAC where there's really no underlying business there. And one of the you know first things they can do is issue common shares to raise money, and then purchase Bitcoin. So if you are a common shareholder, in that aspect, like you are being diluted. The more they issue common stock isn't necessarily the worst thing if they continue to grow, their Bitcoin, per share. But as soon as they take on any sort of debt, that's when I start to worry. And it's like, okay, well, if they ever, they have to pay this debt off eventually, how are they going to service that debt if they are only putting an asset on the balance sheet and they don't have any sort of activity to generate, income or cash flows on the income, statement? And this is where, kind of get into like a winner take all, because I can kind of, and to your point, about, potential, larger market moves. If you are issuing debt and you only have an asset, you may have to sell that asset to service the debt. And then if you have to sell the asset to service the debt, and there are 20 other companies doing the exact same thing, that's ultimately going to drive the price of Bitcoin down. And then it's just like a race to the bottom, because everybody then has to sell their Bitcoin to service their debt. And because the price of Bitcoin's falling, they may have to sell their Bitcoin to service their debt. And ultimately, I think there's a scenario where that just trickles up to strategy because they have the most Bitcoin.
Oh, so you think strategy might eventually have to sell debt? If this, let's call it like Black Swan type event kind of occurs, because I mean, like there was that rumor. What was it last bear market when Bitcoin was crashing? Oh, like strategy's gonna go belly up essentially. Like all the TradFi guys were starting to come out of the woodwork saying all that stuff. Do you think there's ever a possibility, or I mean, because to me what I think is that Bitcoiners, people like there's just such a cult following of this MSTR movement that there's going to be so many people just willing to buy up MSTR's debt that they'll be the only one that really survives out if there is this sudden Black Swan event. But I'm curious what your thoughts are on it.
No, totally. I think that is my assumption if there is a Black Swan event, because I do think MicroStrategy is in a league of its own. One, their financial engineering is brilliant. They have a lot of different levers to pull, and I think they really made themselves more resilient with some of the preferred stock offerings. Not every Bitcoin treasury company can do that. You almost kind of have to graduate to the point where you have enough Bitcoin, you have a confident investor base. A lot of these treasury companies, it's like while retail may be interested, they really need to kind of get the buy-in from other large institutional pools of capital, and those people aren't loyal to anybody besides maybe their fiduciary responsibilities to their investors. And so that's a little bit of a different dynamic. And so I think MicroStrategy does have a lot of levers to pull. Maybe they do have to sell some Bitcoin in a Black Swan event. I'm not as worried about them as like, the 20th Bitcoin treasury company blows up, it's just a domino effect, takes out the 19th, the 18th. And I do see a potential world where that literally goes all the way to the top. And I do think strategy will remain solvent and resilient because they have the most Bitcoin. But it's like, do we get to the point where the second largest holder of Bitcoin is threatened, or the third largest holder of Bitcoin is threatened? I don't think that's a 0% chance.
Yeah, and I mean I tend to agree with you, especially with like all of these guys kind of going lever up. But it always makes me curious too because of what Saylor had said in the BTC Prague. I think he did like a little back end one talk with Adam Back, and I don't know if you caught it, but he said something interesting there that I don't think a lot of people really caught on to or talk about. Where Japan and that market with Metaplanet, he's mentioned Japan like multiple times in his last earnings call. He mentioned Japan. It seems like he always brings up Metaplanet. They're like the seventh or eighth. Actually, I got it up here. Let me look so I'm not misquoting. Yeah, they're their seventh Bitcoin holding company in the world right now. This bull run, I think everybody should focus on getting their Bitcoin in self custody and off exchanges. We all saw what happened last time with the huge blow-offs. We had Celsius, FTX, all of the big dogs blowing up. Well, this time everybody's being smart and holding their Bitcoin in self custody. This is why I'm going with the number one hardware wallet in the game. That's Trezor. You can go to trezor.io or the affiliate link below to get yours for 5% off using promo code Green Candle. Get your Bitcoin off exchanges in the easiest way possible. They are a trusted brand. They've been in the game the longest of any hardware wallets out there. So that's why I've partnered with them, making it the easiest for you to get your Bitcoin off exchanges and not have to worry about any counterparty risk. So do it today. Go to the affiliate link below. Use promo code Green Candle. Enough from me. Let's get back to the show. But he always says like they've got the chance to be number two. Now, what makes Japan so unique of a market that that Saylor continues to talk about them? Not that they can necessarily catch MicroStrategy, but like if a company were to be able to, he always says it would be Metaplanet. Now, why Japan and that market specifically?
Yeah, this is to my prior point. This is kind of like just some of the TradFi plumbing, and how equity markets have been set up in their own local jurisdictions. And my understanding of the Japanese market is it's very difficult for certainly retail investors, but even institutional pools of capital outside of Japan to gain access to Japanese markets. So it's almost like Metaplanet has some like a regulatory arbitrage, and they're going to be more or less protected in their own hyper local jurisdiction and regulatory bodies, because it's a little easier to kind of think these as like global markets, and to a lot of extent they are. It's like money obviously can move from jurisdiction to jurisdiction, but when it's not always the case that retail or even large pools of capital can invest in them. So I think they're kind of protected just from Japan's regulatory body, and so I think they're kind of be the leader and number one player like in their market, and so that will kind of play out in like Brazil or Germany too, just because those leaders will be insulated. But if we think of it as like a global market, even though in practice it's not really, strategies so clearly number one. It's like, do I think Metaplanet has a chance to cement itself as like number two? It's like, yeah, I do, but that's not necessarily. I do think from everything I can tell, it's like they're very quality folks there that are doing a great job, but they do get a lot of help just via their jurisdictional and regulational kind of like hyper local market.
All right, that's interesting because you bring up the jurisdiction, and there's some sort of correlation I think here with Trump and Saylor, because MSTR, they've been doing this strategy for what, 4 to 5 years now at this point. But since Trump has come into office, they've bought 60% of their Bitcoin, so it just seems like they're accelerating the Bitcoin buys. And obviously, we're seeing just the tidal wave of Bitcoin treasury companies come online. Was that big in part? Do you think we would see this if we didn't have, I guess we'll call it a crypto friendly president in office right now? And if we had, maybe a rerun of the last administration, would this be accelerating as quickly as we're seeing it? Or do you think it's brought in some, I guess, let's call it some peace of mind to maybe the TradFi community about putting Bitcoin on the balance sheet and the FASB ruling, all of these different things kind of accumulating that has just allowed this to just really just take off at a rate I don't think any of us really saw coming.
Are you a crypto bro now?
I could be, dude. I've been told that with the hat backwards, dude. That's what TJ Miller told me that once when I interviewed him. I got the hat backwards. Now I got the mustache. I mean, the beard's coming in a little bit, so I could be told I'm a crypto bro now, I guess. But I mean, I'm curious. I mean, you're the TradFi bro over here, so that's why I got you on, dude. You got to get. Where's your suit and tie here, Wyatt?
Yeah, I'm not a big tie fella, but I did throw the sport jacket on just for you.
Yeah.
Um, I do have to say I did want to tell you on this interview. You're running the Bulls picture, very handsome. Like that's
Thank
what I want
you.
my Bitcoiners to look like.
Thank you, dude. Hey, for the bull run, you got to do it, right? I got the hair going, but I got to put it in the hat now because it is getting a little sloppy. You know, I didn't go out and do I didn't go due to the gel for you today, but you know, we got to do what you can.
That's fine, man. I won't take it personally, but yeah, to your point, yeah, it's like I think that has to play in the game theory of all of this. There's been a lot to come out now on the Biden administration and the oh shoot, I can't believe I forgot her name. That senator from Massachusetts.
Warren?
Yeah, yeah. Okay, good. Thank goodness. I'm happy I forgot her name. But yeah, like the Warren cabal. It's like Caitlin Long is, man. This might be close to a year ago now, but she did an interview on TFTC where she really broke down, kind of just like yeah, Senator Elizabeth Warren really kind of calling the shots and almost having unfettered brain on like kind of like the larger financial system. They were able to put a lot of their folks in positions of power that were very anti-Bitcoin and adopt a branding term, crypto. Um, and so, I think it has a ton to do with the new administration just being more friendly to this, this industry at large. And I mean, for goodness sakes, I mean, they were literally, arresting, people. And I think that really kind of freezes any sort of, business environment. Entrepreneurs, like, they want predictability because, they have to make investments that are hopefully worth more in the future. And when you have, that level of uncertainty, you really can freeze any industry. And so I've been very optimistic on some of the legislations and bureaucratic rule changes we've seen that affects the Bitcoin and crypto industry at large. And I've never talked to Saylor, but if I were to put myself in his shoes, I think he was playing a pretty precarious game. And this is kind of, while I don't agree with it, I give him some credence for really just kind of staying persistent on like this Bitcoin is property kind of messaging. I think it's money. I think we should use it as money. But if you're in his shoes and you're one of the largest holders of Bitcoin in the world, like, you kind of try to have to take a target off your back. And it's like, he obviously has a fiduciary obligation to his investors and shareholders. So I think he feels, and you backed it up with the numbers, much more comfortable operating in this type of regulatory environment than the one we previously had.
Yeah, 100%. And I know you're coming at me for the crypto bro type of lingo, but I'm setting myself up here because we've seen the rise of ETH treasury companies now too. Do you think that that's a negative for the Bitcoin space, or is everything positive for Bitcoin space? Because we've seen the crypto bros with the hat backwards, the crazy hairs, and the mustache just come out of the woodworks these days. And now we're seeing like the Tom Lees, invest in these ETH treasury companies. And, I personally think, like, all right, this is going to be something where, maybe it's not on the ledger, the level of an FTX, but these ETH treasury companies, they're bound to blow up, a little bit quicker than, the Bitcoin treasury ones. And that could kind of start this snowball effect where it bleeds over and people are still conflating Bitcoin with crypto. So, although, we have a friendly administration, I don't know if they really have set the difference between Bitcoin and crypto at this point. So that's where I've kind of, I was setting myself up here, man. You beat me to the punch, just by calling me out here, Wyatt.
Oh, I'm sorry. I'm sorry. I'm just like so adverse to that word. It's like nails on a chalkboard. But I think the treasury companies are hilarious. It's like I don't know what they're trying to do. Obviously, just like LARP and do whatever Bitcoiners do. I think as they've been doing since the beginning. But I have zero confidence. In the long term success of those companies. I would never recommend anybody put their hard earned money and capital towards those companies. I'm extremely bearish ETH, but I'm a small kind of government type of guy, and so it's obviously they're free to do what they want to do. I don't want to like outlaw ETH treasury companies. I just think it's a road to nowhere, and it's kind of important. I think when we zoom out, these are complex systems, and the best analogy, even though it's not perfect, I've been able to try to distill down or to other folks or just understand it myself. And I predominantly use it with just the existence of fiat currency in the US dollar, but I think applies to Ethereum as well, where it's like it's actually very hard to imagine Ethereum or the dollar trading at zero, just because like it's become so ingrained and prolificated like all over the world. I think it will essentially be worth nothing, but to actually get it to zero, is going to be very hard. It might be at 5 cents, for forever, but just kind of like the mechanics of getting it to zero. But like the more complex the systems are, and like the analogy is like the bigger they are, the harder they fall. I think it's kind of like the more complex it is, like the longer it can kind of stay alive. So I think it's going to take a long time for the dollar to eventually be eradicated. I mean, there's still fax machines and like checks. I have to pay my rent with a check. I'm like, dude, like what are we doing? I literally have checks for like one reason. It drives me crazy. But you know what I'm saying? So it's going to take a long time for these things to I think prove that they're worth nothing. So like if they think this is their moment in the sun, like I think it's like that Mad Men meme where it's like it's like I don't even think about you at all.
Yeah, and I mean, I hear you with that. I was just kind of curious as to what you think, and I mean, I agree. I think it is kind of comical. I mean, I'm sure we'll have some guy trying to get like an XRP type of treasury
Right,
company,
right.
and some crazy things just coming on. I actually saw somebody ask Grok the other day. Out of the other top 10 market cap cryptos, what's going to perform the worst? And it was like, just started listing them all off, how they're just not going to beat Bitcoin. So I think everybody's going to eventually come to that conclusion. It's just a matter of time, right? And I think that's what these Bitcoin treasury companies are starting to, I guess, like open the eyes of people, because now they're forced to evaluate Bitcoin and have some sort of price action towards Bitcoin. Now, you are obviously still in that trad fi world. You gave us the disclaimer earlier. You freaking
Yeah.
soup bro over here. So, uh, how are the other like trad fi bros still looking at it? Do you think that we're there yet, where everybody's recommending it? Because I mean, on the flip side of things, we still have Vanguard, not allowing their investors to buy IBIT and the other ETFs, even though we have had kind of this Bitcoinization of finance slowly start to trickle over.
Yeah, man. Oh, it's a great question. One thing that I just kind of want to add on the ETH treasury companies too, and this is really kind of what I mean. It's like when you know, this applies to Bitcoin treasury companies. This applies to ETH treasury companies. So if we just had like a crypto native person and they started dabbling in traditional capital markets, like understanding what fiat games mean. So it's like if you tried to, and I know this may be hard for you Brandon, but if you tried to put yourself in the shoes of like the most tradfi minded guy, they still think Bitcoin's drug money or whatever FUD they want to spout off. They will kind of view Bitcoin treasury companies and treasury companies in like the same sub market like buckets, like crypto treasury companies or whatever. So it's like inevitably when one of these things blows up, they're all going to be dragged down with them. And so even strategy, if the treasury company blows up or the 20th Bitcoin treasury blows up, I think the larger market is so unfamiliar with these types of investments that they'll all be kind of grouped into one, and we will see a larger sell off. So
Why would you ever hold generational wealth on a piece of paper? It doesn't make sense. You need a foolproof solution, and I've got it for you. You could get this as low as $25, and if you use promo code Green Candle, you could get 10% off. Being around for 12 years, they've engineered the perfect and most easy to use solution. I've partnered with CryptoSteel to offer you guys just that. It is the cheapest and most secure way to store your seed phrase. I don't know about you guys, but I don't have too many things where I think 1 ton is going to fall on this, but it could survive all of that and more. So go to cryptosteel.com. You can use promo code GreenCandle. You can get 10% off your entire order if you go there today. So go ahead and protect your generational wealth and do it with CryptoSteel. All right, enough from me. Back to the show.
I think that's just kind of important, understanding the context of wading into new waters. And I think it's particularly kind of unfamiliar with Bitcoin folks. But to your question about TradFi adoption, so my specific subsector of the finance industries, I brand myself as a Bitcoin financial advisor. We help with the different wealth management techniques for specifically Bitcoiners, but we still do TradFi work as well. But I'm part of the Bitcoin Financial Advisors Network. I was just researching this the other day. I think there's 11 of us in this group, and there's 300,000 financial advisors in the United States. So we're very much a niche of a niche, which I take a lot of pride in. I think it's super exciting. I love my work. Obviously, there's like some more financial advisors that are more pro Bitcoin that aren't in your group. But moral story is, it's still very few of us. It was disheartening to see not too long ago. The CFP board was actually pretty anti Bitcoin. I know some former CFPs who have since dropped the designation just because the CFP was like getting on their case, and got to like get a formal interview and all that junk. And so that was very disheartening to see and hear their experiences. But staying in kind of like the wealth management field, I'm kind of broadening out from there. I think kind of like one of the biggest reasons a lot of wealth managers haven't been more pro Bitcoin, I think this slightly changes with the ETF, but it threatens their business model. Yeah, most of them charge via an AUM basis, which means the assets need to be at a custodian, like Schwab or Fidelity. And so at Basilic, in our practice, it's like, I think that's very antithetical to the Bitcoin ethos. Jeff Booth adopts some of his wisdom here. It's like, to me, charging AUM is very rent seeking. It's not like I'm recommending like this crypto over that crypto. It's like, no, I'm literally just telling you buy and hold Bitcoin. So we work on a fee basis. But most, RIAs or financial advisors, like that's how they make their nut. And so I think they do feel threatened by that. And kind of our shtick is that we don't just blindly put clients in the ETFs because we're in Bitcoin for more than just price exposures. Like, we're in it to be in full control of our wealth, to be uncensorable, to be sovereign individuals. And so I think that's just kind of a violation of my fiduciary duty. And we partner with Unchained to make sure our clients can hold bare asset Bitcoin. And so when I brought it out from the wealth management industry, I'm actually pretty excited and bullish on what I'm seeing from the larger kind of TradFi industry of getting interested. There's kind of an old saying in finance. It's like, you don't get fired for buying IBM. Back when IBM was still a well-performing company, they should probably update that. I guess, maybe NVIDIA is like the modern day IBM. But there's a lot of groupthink. And, this is, not specific to finance, but, there's a lot of groupthink. And I really am fascinated by, social circles and social interactions. And I think, if you're like this fancy suit and, you went to Harvard, you worked on Wall Street, like you did the thing, like you're going to be very influenced by your peers. And I think those folks are just now starting to understand Bitcoin. And so we're starting to see some more, products built. But what I'm, specifically bullish in is kind of like it's like TradFi is going to do its thing. It is very important to, hyper Bitcoinization, in general, but it's really kind of like the crossover companies that I think are doing the most work and like the most important work. And, kind of a couple examples there, like Bitnomial, there's nothing inherently wrong with an options contract, right? And this is where I push back against Bitcoiners, where it's like, why are you so against finance, right? That is literally a business contract, or in case of Bitnomials, it's futures, but this is a business contract where two parties have decided to enter a trade. You're each going to take either side of the bet, and so what they're doing is pretty cool. Where they're actually putting hash rate futures, and being able to trade those markets. They're CFTC licensed and registered, and I think some other examples I'm very bullish on. Kind of the Bitcoin lending space. There's a lot of cool stuff going on with Bitcoin collateralized loans, and then there's even kind of some more cool stuff with companies like Orange Bridge, which are allowing you to access like your home equity to purchase Bitcoin. And these are all, if I recommend a partner to my client, I like to, a little old school, get them on the phone, try to understand their business model, their ethics, how they do business. And these are all TradFi guys that have been have had their eyes open to Bitcoin, so they're using their TradFi skills, and a lot of the same kind of theories of the underlying mechanics and plumbing of these systems, and applying it to Bitcoin. And ultimately, I think that's extremely good for all of us holding Bitcoin, because it deepens Bitcoin capital markets. And so it's like, when you have a deeper capital market, you allow more players to enter the game, and take either side of a bet you would like to participate on. And then you have new financial products and tools and strategies that are bore out from there. So this is all very good stuff. And I think as a Bitcoin community, we kind of need to do a better job of not being so just negative on the finance industry, and adopting what has really worked for many years.
Yeah, and I want to get into all of these new products that we're coming into, but I mean, you mentioned the traditional financial, industry, and of course, we got to talk about the ETFs. I mean, these
Yeah.
ETFs have been some of the, best performing ETFs in history. I just saw like the ETFs now hold 1.29 million Bitcoin, worth 160 billion dollars. It's on track to hit 1.5 million by year end. And then on top of all of that, just the BlackRock Bitcoin ETF, the IBIT alone, it surged past $90 billion. It's been the most successful launch of an ETF in history. So it shows that the, TradFi world, there was just so much demand for a Bitcoin product. But the narrative is that, TradFi still isn't here yet, and that retail is still buying a lot of Bitcoin. Now, I'm curious kind of your thoughts on the comparison to digital gold right now, because, I had a great talk with Mark Moss where he kind of, lined it out where first 10 years it's retail, second 10 years it's institutions, third 10 years it's governments, then you'll start to get it as a medium of exchange. And then the last 10 years, you'll get it as a unit of account. And it seems like it's playing out that way in kind of a 50-year cycle, so to speak. But that means right now it's kind of being compared to a digital gold. And these ETFs almost prove that, I think. But I'm curious what your thoughts are on that, and just the rapid growth we've seen in the Bitcoin ETFs.
Yeah, it's a great point, and great question. I would largely agree with Mark there. I think that tracks, and that's kind of my personal thesis as well. I do think we really shouldn't brush under the rug the success of the Bitcoin ETFs. I do have back and forth thoughts on those, and I'll kind of try to unbox those. So it's like, part of me is kind of proud. It's like, try to finally did something in Bitcoin. It's like, hey, let's do an ETF. It's like, okay, great. I think a lot of kind of the normie types really kind of viewed that as like a vote of confidence in the asset class. So I was happy to see that. And ultimately, I do think it's kind of like square one. I think there's a lot more work like the industry can do. Um, And yeah, I was doing some research for this pod. So extremely successful launch. Year to date inflows are about 15 billion, slightly above this time last year we're about 14.5 billion. So it's like we are still seeing adoption of the ETF products. I think, and this is going to take a long time to like unravel, but I think a lot of this just has to do with like different types of either government imposed regulations or self imposed regulations. So if you think of like a pension fund or an endowment, those asset managers have some sort of investing criteria and guidelines. Their investors that they owe a fiduciary obligation to, they have to follow that mandate. So it's like a lot of times they can't just buy spot Bitcoin because their hands are tied in one way or another. And this is a positive thing in the kind of intersection of the traditional finance and Bitcoin, where it's like a tool is now accessible for some of these pools of capital to get at least exposure to Bitcoin via a different type of financial tool. And so I do feel like ETFs are kind of square one, but it's important and it's good that we're moving in that direction. I do think a huge development in the Bitcoin ETF world was the approval of in-kind redemption. I think paper Bitcoin is one of the biggest threats we face as Bitcoiners, and the finance industry at large will be, I think, very interested in paper Bitcoin. I think this is when you look at gold markets, people have been complaining for decades now that they're manipulated. And I think that's right, just because we have this unlimited paper on top of a scarce asset. I do think that's a threat to Bitcoin. I encourage any kind of Bitcoin finance professional I speak with, where it's like we have to do our part as Bitcoiners and whatever subsector of finance we work in to promote the Bitcoin ethos and build companies and products that sustain and encourage the Bitcoin ethos as well. Because the thing about gold is it's hard to custody. It's heavy. You have to have like armed guards and vaults and all this stuff. So it's very hard to actually settle a trade in kind. Well, that's not the case with Bitcoin. I think Bitcoin's super feature is that it natively allows its users to custody the asset themselves. And this means Bitcoin custody is decentralized, unlike other sound monies of the past. And hyper Bitcoinization works if Bitcoiners can build a financial system where the asset Bitcoin actually settles and trades in kind. I think this is where we can really remove a lot of those paper shenanigans. And so that approval of in kind redemption for the ETFs, I think, is a massive step forward for the future prosperity of Bitcoin, because we remove the risk of rehypothecated Bitcoin, or Bitcoin that we were told exists that just doesn't. And so even like the threat of Bitcoin being called or in kind, I think, is a very healthy market dynamic. And this isn't a new concept. Like, this exists almost in every commodity ETF. You can actually take delivery of the underlying asset. It There are some nuances here. Usually this is only allowable for institutional investors, because there's kind of layers to ETFs. So ultimately, I would like to see in-kind redemption for retail investors as well. I'm not sure when we'll get to that point, but for the time being, I'm happy with like this kind of decision.
Yeah, I mean, I agree. I definitely think it's a step in the right direction, but I think like all roads will eventually lead to self custody. Now, before we get into like the new lending products, because I do want to talk a little bit about that as well as after you brought it up, but the parallels with gold, I kind of want to keep hitting on that a little bit, because I think the interesting thing that I've been tracking is that you've seen a lot of outflows in the gold ETFs here lately, but you've seen the gold price go up. I think the gold, like in the past 5 or 6 years, has seen like a net outflow of their ETFs, and central banks have been buying up the hard physical asset. So people are kind of trying to move away from that quote unquote paper gold. Now, do you see that as a path forward with Bitcoin? At least, obviously, we're seeing the ETFs right now absolutely exploding. You even, pointed out basically the same amount of buying, maybe a little bit more this year comparatively to last year. So even though we're seeing more buying now, I think that this is just kind of par for the course. You see this new product come in, everybody's going to be buying it. Hey, you know what? I'm going to feel more comfortable with this. And something is going to spark somebody or a new wave to, say, hey, I want to hold Bitcoin, the physical asset. I mean, of course, you're already recommending that, but I think a lot of people still feel comfortable with the old ways of things, having the ETF, the Black Rocks, whatever. But I think that another way forward is eventually going to be, the just self custody. It's just we're not quite there yet. Is that what you kind of see playing out as well? Like, hey, right now, maybe, grandma, grandpa, mom, dad, you might feel more comfortable buying Bitcoin in the ETF with BlackRock, even though they probably know deep down in their heart Larry Fink and BlackRock are evil. They rather trust them, than trust this crazy guy running from bulls with mustaches and a bad haircut.
Oh man, yeah. Well, this is I've kind of taken a pretty firm stance on my personal recommendations with ETFs because like I was mentioning earlier. It's like, okay, well, if we can't hold spot Bitcoin in a 401k, let's at least get exposure to Bitcoin via ETF. And I am grateful that the ETFs exist so we can ultimately achieve that goal. Fortunately, there's been great developments by Unchain. If you retire, you can roll that 401k into an IRA where you can actually custody and be in full control of those keys, and then your Bitcoin's kind of in like this IRS paper shell, and so you technically can move your Bitcoin out of that, but you violate the terms of like the IRS agreement, and then there'll be tax consequences to follow. And so this is kind of I mean earlier about there's a lot there's a amount of paperwork and of of regulations and self-imposed investor mandates. And this comes from a variety of different bodies, like tax qualified accounts available to like the standard person, like IRAs and 401ks. Like those assets have to be custodied at a qualified custodian. And so I hope that language changes in the future, but for the time being, we're kind of hamstrung by existing regulations on how we can get exposure to Bitcoin and ideally bear asset Bitcoin. So I think it's crucially important to work with Bitcoin native companies and Bitcoin professionals that understand how you can get access to self custody Bitcoin, because I do agree with you. It's like that is the way. I do, however, push back on this idea. It's like, well, just buy the ETF. Like it's easy. It's like, well, self custody isn't hard necessarily. Like you just have to do some homework, and there are a growing number of professionals that are able to assist you with that. And so I think as a Bitcoin community, we really shouldn't shy away from self custody just because there's now an easier way to get price exposure to Bitcoin. I push back a lot on just like doing that, and using the example I'm most intimate with, just myself and Unchained. Like we're able to offer tiers of custody solutions depending on how comfortable people are with the asset and technology. It's like you, Brandon, can hold two keys. Unchained has one. I'm a key agent. I can hold a key. You hold a key. Unchained holds a key, and then we can also explore institutional multi-sig. Where we have two U.S. domiciled trust companies that will hold the key on your behalf. And when we're talking self custody, obviously there's no silver bullet. I try to phrase it to people in the idea of like risk surface area and how we're reducing our risk surface area the most, and understanding the trade-offs with the different types of custody solutions. So even grandpa and grandma, I have some older clients where we've done the multi-institutional multi-sig that is still cold storage multi-sig Bitcoin, even though we could have just bought the ETF and checked the box. And so this is where I really kind of rely on the Bitcoin ethos and like the Bitcoin community. Ultimately, like we are going to have to fight to do things like the Bitcoin way. And I'm not necessarily a big tech guy, but I have a ton of respect for the cypherpunks and the people that gave us freedom money. And it's like I think it's up to any Bitcoiner, whatever industry they're working in, to make sure we're kind of passing those values down from Bitcoiner to Bitcoiner and generation to generation, and understanding the responsibility that comes with that, and not shying away with it. Um, to your point on gold, though, I've been kind of observing this from like a 30,000 foot view, and from my takeaway on this is the people on the inside know like the gig is up, like the music is about to stop here, and this has been a long time coming. I mean, shoot, man, we're like 55 years or something from 1971, so it's taken half a century for people to realize like, yeah, this kind of unfettered fiat money printing, like this isn't really a good deal for anybody besides the folks that can literally print the money. And so kind of how I'm assessing the movements in the gold markets, I think Bitcoin is hand in hand with this, is people want a return to hard assets. It's like, I think the average Joe, I think this is specifically relevant, the millennial and Gen Z.
This bull run, I'm looking for ways to stack Bitcoin in my sleep, and mining has always caught my eye. I've partnered with the guys over at Simple Mining to help you do just that. I don't recommend anything that I don't use personally, so I've got a machine up and running with them right this second. And they've even opened the facility up so anyone can go and visit. They manage over 15,000 machines for 500 clients, handling all of the maintenance and repairs so you don't have to. And for the Green Candle listeners, they're giving an exclusive offer: all the repairs for the first year for free. So if you've been thinking about mining, head on over to simplemining.io/greencandle to get this exclusive offer and learn about the potential tax benefits that you can get from mining with Simple Mining. All right, enough from me. Let's get back to the show.
Generations where it's like, why am I constantly able to get less for my money? And it's like they may not understand the intricacies of the fiat monetary system, but they kind of understand inherently that they're being stolen from via inflation. And so I think we're in the macro view seeing a return to hard assets. And I think gold's been a store of value for a millennia. I think it has a fighting chance in the future. Obviously think Bitcoin is better on many levels, but it's ultimately a part of this larger trend where it's like, we want to get rid of this paper stuff, or at least we want less exposure to this paper stuff.
Yeah, and I mean, I think everybody, like you said, is going to want to get towards that hard asset, and I think eventually we get there. But I mean, I hear you. We got to start pushing that stuff early and often, right? Because then eventually they'll all come, and everybody bends the knee to Bitcoin, and all of these products are starting to come our way. Specifically the Bitcoin lending products. Bitcoin is now finally being looked at as like the most pristine collateral on the planet. We've got Strike, we've got Salt, sponsor of the show. We've got other companies like Firefish and some of these other ones coming on as well, that are all great, offering these Bitcoin backed products. I believe Unchained does as well, or they did at one point in time. But now even like the big dogs like JP Morgan, they're letting you take loans based on your like Bitcoin ETF holdings, which they weren't letting you do previously. So I'm curious, kind of the development of a lot of these, fiat based products, because before it was like the narrative, all right, Sailor, he's got billions and billions worth of dollars. He can borrow all this money at like 0% interest rates or low interest rates, and buy Bitcoin, and he's the only one that can do it because he's filthy rich. Now it seems like it's more accessible to the average Joe. So I'm curious, kind of I guess as we're moving just on the theme of the Bitcoinization of finance, HELOCs, all these different now things allowing you to buy Bitcoin. How important do you think that is to the development of the Bitcoin space? And do you see this accelerating just as quickly as we're seeing the Bitcoin treasury companies come on?
Yeah, I'm very interested in the lending space, and I'll try to speak to the average Joes like myself. This may not be pertinent to the filthy rich like yourself, Brandon, but for your audience, let's do this for the audience, right? Lending itself is a extremely important cog of any capital market, right? And I'm not as morally opposed to debt as some. I'm certainly sympathetic to that argument, and I'll kind of preface this conversation where it's like I get a lot of confidence. I'm a bit of a history buff and nerd. It's like my wife asked me how often I think of the Roman Empire, all that sort of stuff. But I get a lot of confidence like looking to the past. And so it's like, as Bitcoiners, we're kind of on the cusp of like this new, asset and technology and can be very exciting. And it's like, oh, what's the future going to hold? It's like, I find in a surprising amount of situations, like we don't actually need to recreate the wheel here. Right. I think of that, from a moral and ethical perspective, but also, kind of a nuts and bolts perspective. And so what's interesting about Bitcoin collateralized lending is an over collateralized loan is like a nearly prehistoric, loan dynamic in the realms of finance, right? It's almost been forgotten and lost to history because of the proliferation of credit-based, fiat systems. So it's like we're actually taking like an old concept and applying it to a new asset and technology via Bitcoin, right? And obviously, this really kind of comes down to the fine print of whatever service provider, individual looking to partake in a loan decides to do business with. I try very hard to do business with Bitcoin only companies, and there's a lot of fine print. You want to be in tune to like your LTV ratio, your collateral to principal ratio, how you need to pay back the debt. A lot of these Bitcoin collateralized loans are called like bullet loans, so you just pay back the principal and interest at the end of the loan. Some will require you to make monthly payments on that. How the interest rate is calculated. Some do daily interest rate. Some are like annual interest rate. What percentage of your Bitcoin stack are you putting in collateral? All these are important things to consider. But the functionality of the loan itself is ultimately pretty simple, right? For simplicity's sake, I know we're a little bouncing all over the place now. But let's say we have $100,000 Bitcoin. If we want $100,000 in cash, we need to put two Bitcoin or $200,000 into some sort of like escrow wallet. And so, we're able to put those two Bitcoin in and get, one Bitcoin's worth or $100,000 worth of, cash out. And I, do a lot of due diligence on, different partners I work with on their custody solutions. Obviously, keeping our Bitcoin is paramount in this type of situation. I think the best that do it, they have 2 or 3, multi-sig vault. The borrower holds a key, the lender holds a key, and then a neutral third party holds a key that determines if the business contract was fulfilled or not. If you pay back your loan, you get Bitcoin back. If you defaulted on your loan, some of that Bitcoin will be liquidated. The lender will be made whole, and you get the remainder of your Bitcoin back. So it's actually like a very simple and kind of like old school dynamic that I'm excited is being applied to Bitcoin, because I put this in like the broader Bitcoinization of finance thesis. This opens up a lot of optionality and functionality for people who hold a lot of Bitcoin but may have dollar denominated liabilities. What's particularly interesting about lending in the context of capital markets is I'm very bullish on lending as a subsector of the Bitcoin financial services industry. And as we get more service providers enter the market, the interest rate that they will charge on loans ends up being a market signal for how the perceived risk of Bitcoin. And so I think that's going to be very telltale sign of how we proceed with hyper Bitcoinization. And ultimately what that means is like the deepening of capital markets. I know I mentioned that earlier, and this is just another example. So it's like the more products, tools, products, and strategies available in the Bitcoin asset class, and a lot of these like Bitcoiners didn't think of a loan, right? This is a TradFi tool that's now being applied to Bitcoin. That just gives us more data points that we can assess the current and future value of Bitcoin. And so I think lending is a crucial part of that.
Yeah, and I think that's interesting that you're pointing that out as like, hey, these interest rates is almost like a vibe check, so to speak, of
Yeah, yeah,
how
yeah.
everybody perceives that. So, I think that the development of this, I guess, industry, even though some of these companies have been around for a little bit, I think there's more of, I guess, like TradFi starting to come in. I think it's just overall just very bullish on Bitcoin now. I know you're a financial advisor, so I don't know if you could give me one, but where do you see Bitcoin going by the end of this year? Because it seems like now you don't need to sell your Bitcoin. There's 450 Bitcoin mined every single day, and we're seeing treasury companies scoop it up all now. Allegedly, the whales are selling. I don't really know if I believe that narrative, but then we also have you know a 99% chance that the Fed's going to cut interest rates and the liquidity is going to be going up. And Bitcoiners love that global M2 money supply chart with the Bitcoin chart. Do you have a price prediction for us here, Wyatt? I'm going to put you on the spot here.
Dude, I thought this might be coming. I was trying to think of a smart answer, but I think I'm a simple guy, man. I'm the average Joe. I don't live in ivory towers like yourself, but I don't know where it's going. I think I am leaning towards kind of the ending of cycles. And I largely think that is because of Bitcoinization of finance. And now that we have more tools that allow some of the largest capital pools in the world to flow into Bitcoin, I don't think we'll be operating in kind of like the standard 4-year cycle, moving forward. That being said, I'm like a total amateur, like human psychology, fan. I do think it will be a round number. I think somebody will have, their sell limits in at like 250K, 300K. It won't surprise me if we end up, somewhere, in that range. Obviously, I don't think it's up and to the right forever. We'll have some, dips in there. There's a lot of different, market, you know, events and potential black swans that we can't foresee. But to give you the cop out answer, I feel fairly confident about that range, and I do have a fairly high confidence it will be a round number.
There we go. All right. I like it. Well, Wyatt, you've got some great things that you're working on. Of course, we talked about the book that you wrote. So tell us a little bit about that and the other things you've got going on in the Bitcoin space. I mean, you're the suit and tie bro now. I guess like being that the one nerd in the suit and tie bro is yelling about this like funny internet money. So tell us what you got going on in there, man.
Yeah, no, I appreciate it, man. It's a ton of fun. I feel super fortunate and energized every day to be building a business in Bitcoin. Would recommend everybody to do that, or look how they can provide value to the industry. But I really wanted to write the book, because the Denver Bitcoin community has a special place in my heart. Help get the space up and running, which is our citadel, and I'm around Bitcoiners every day. That's where I office out of, and like I mentioned earlier, a lot of them do have a disdain for finance or professional services, and I just kind of got tired of getting poked in the ribs, or it's like, oh, why do you do this? Why can't you just buy Bitcoin? Yada yada. All the stuff you've heard. And so this was really kind of my effort. I feel like I've gotten so much from the broader Bitcoin community. I've learned so much from the great folks that contribute there. Or this is my effort at giving back, and really trying to open the Overton window, if you will, about how the best of finance and TradFi can be applied to Bitcoin, and how this is a good thing for Bitcoin. And honestly, to maybe wipe the smirk off of some of the more negative Bitcoiners out there, because I do think it's silly to think hyper Bitcoinization would ever happen without the largest capital pools being able to move into the asset, and they're going to need the finance industry to do that. So that's ultimately what I was trying to get across with the book. Got some great reception on that. Brandon, yourself, early reader, and one of the first people to get their hands on it. So I'm super appreciative of your support. And that really kind of obviously, interacts very directly with my business, Basilic Financial. We help people, with sound money strategies, but it also, ended up parlaying itself into the Bitcoin Financial Services Summit, which we'll be throwing at the space October 16th through 18th. I'm planning that with my colleague, Jordan Guess. And it's been, a ton of fun doing that. We've got, a great, lineup of speakers forming, and we're really, what we're trying to do, and this is ultimately our strategy at the space too, is really focus on these summit type events. So it's going to be 150 people max, hyper specific to the Bitcoin financial services industry. We'll have folks like Arch, like Meanwhile, like Build Asset Management, entrepreneurs in the space building these products, and so I think it's going to be a great time. We got golf, bourbon tasting, community meals, and it'll be a awesome opportunity for us to get some brain power together and see how we push this industry forward in the Bitcoin way.
There we go. And yeah, it's getting some traditional business stuff back in, right? I mean, hey, I like the golf, the bourbon tasting, all that kind of stuff.
That's
We
right.
actually had that conversation at the Bitcoin Sports Network not too long ago in Vegas, where I got my signed copy of the book. So, yeah, Wyatt, you've been a great voice of the space, and I use that ironically, I guess, but of the Bitcoin space in general. And man, keep it up, dude. I love to see what you're doing, what you guys are doing out in Denver. I've went and checked it out. I recommend you guys check it out as well. And yeah, I'll put all that in the show notes. Go bug Wyatt. Go rub his bald head too. I mean, I think it's good luck. I think if you go and rub it, the Bitcoin price will go up. I don't know, maybe. But Wyatt, you've been so generous. So tell people where they can find you on Twitter and maybe reach out to you, bug you a little bit. And yeah, man, thanks so much for coming on.
Dude, the pleasure is mine. I got this bad boy polished up for you today, so I thank you for appreciating it. You can find me on Twitter at WyattO'Rourke _. You book a free consultation at basilic.io. You can find some of my writing and other podcast appearances at WyattO'Rourke.com, and tickets for the Bitcoin Financial Services can be purchased at denver.space.
What a legend. All right, I'll put all that in the show notes. You guys definitely go check them out. And Wyatt, I'll catch you. I'll catch you at one of these great events here in the near future, brother.
Dude, thanks so much, Brandon. That was a blast.
Thank you guys all for tuning in to another great episode of the State of Bitcoin podcast. If you found some value in this one, please hit that subscribe button and that like button to help send this one to the masses. And I've got a surprise for you guys. I've got 2 more episodes that you have the chance to watch here. So go ahead and click one of them, and I'll see you guys all at the next one.